Hello guys and welcome to another video. Before we get started with it, I want to say the next. I am not a financial planner nor a financial advisor. I am not FCA approved. I'm not approved by any institution that allows me to give financial nor investment advices. Nothing mentioned in this video should be considered investment advice or guidance. Everything shown, talked, and explained is for pure and only educational purposes. The risk is on your own hands. Enjoy. Hello guys, good morning. Today is Monday, August 9th, is it, or 8th? 9th. And I'm going to be talking about today's traits, things that I did right, things that I did wrong, and yeah, that's pretty much it, I'd say. So, we'll begin with, the price action that I got up to. Basically, I realized that we had a major supply to demand flip right here. Strong move. We caused a couple of major structures. The causes to those major breaks were this area right here. As you can see, caused a pretty strong reaction there. Let me kind of want to change the. Yeah, that's okay. So you can see, it caused a strong reaction here. So that later works for a demand to supply. Well, a demand break, as we were already in a supply market after the break of this area, right? Yeah, that's pretty much it. So the first thing that I identified, keep in mind that I got up at 6:30. I saw that we had this demand area that price respected, right? So that was my demand area at the beginning. We then caused another reaction at that demand area, which is a pause before this major break that we have down here, back here, sorry. And basically that was my demand area at the moment. So what happens later is that we break the low, price comes back up, mitigates the extreme, right, and starts to fall, then comes back up, mitigates a little bit further. You see that we have another demand area right there. We break that demand, right, comes back, mitigates the cost to that demand break, and starts to fall. That could have been a trade. I said it on Telegram. I was very active today on Telegram. I talked a lot through the day, as price action was going forward. And as we had 1 and 2 pauses right before this flip, we could have only considered this one, right, as what did I do? Basically this pause happens after we actually flipped, right? But as we had that, and basically even then we created liquidity, I just decided to go for the extreme, right? At some point I had deleted the trade, which is why I ended up market executing it with a 3.5 pips stop loss. If it would have been 30 pips stop loss, which is what it should have been, would have been a much a little bit easier for me to target, as I basically would have gone to this area, right? So it is a major break, pause to major break. In this case, it's a 1 to a 4, so pretty much I would have gotten 1% at this point, so I probably would have closed it. I did realize that we had that area when we pretty much started reacting like this, right? So that's pretty much it. So what happens here is that we create a high, a low, a high, high. At this point, I decided to, when we broke this low, right, even though it's not confirmed structure, this is my confirmed high, this is my confirmed low. At that point, I decided to move my stop loss above this structure, and price basically came back up, took it, and then will continue to fall. And yeah, that's pretty much it. So the mistake here was moving my stop loss above this high. The stop loss, usually if I move it, which is not something that I'm supposed to do, as it is not on my trading plan, if I move it, it always should be above this high. Why that high? Because as you can see, we have this area, right, that basically caused demand break, demand to supply flip, and basically after that, price went a little bit further and then came back and mitigated all of the liquidity in the middle and basically tapped this extreme area, right? That basically even comes from mitigation. So after that, we have a very strong move, right, that breaks some major structure. We even have this demand break right here, right, and that was all caused by that extreme. Not only that, but when you have an entry, right, we're supposedly taking it on an area of pretty much either supply or demand. As an example, in this trade that we have here, my stop loss should have been above this area. And why? Because we're taking this entry, right, we're taking this order block, and the stop loss is going to be above that high. because we do not expect price to basically go above that. And unless, as an example, in this case, we could have gotten a stop loss somewhere around here, just to keep in mind that price could easily go up, take the liquidity, and then continue to fall, right? But usually you wouldn't expect price to go above that area, right? So as an example, this trade that we have here, the stop loss should have been here, and when price basically broke this low, we would have moved I would have moved my stop loss to basically above that order block, because when we break this structure and we come from mitigating something, I count that as a potential opportunity right there. So that could be another sell, right? But if I move it to break even, let's say my break even is here, basically on the 50% of the candle, price could come back up, mitigate, hell, you could even mitigate the top of that area, and then basically fall, right? Take me out on break even and then continue it in the fall. So that's the reason why my stop loss should have been above the order block in this case, and not pretty much here. Also, so as you can see, we have our confirmed high, our confirmed low. All of these substructures, so nothing in the middle actually matters. When we break this low, the cost to that, or basically the move, as you can see, whether we move, price can move millions of ways differently, right? But usually what you have is lower lows, lower highs, lower lows, lower highs, lower lows, or of course, well, high highs, high lows, high highs, high lows, right? So stuff like this. What happens in the middle, on the concept that I'm trying to explain, is pretty much worthless, right? We don't really care what's going on in the middle, but we have to know that this is our confirmed high, this is our confirmed low, confirmed high, confirmed low, right? So as an example, if you want to trail stop losses, you have to do it after price breaks those confirmed lows and confirmed highs, and basically put it below your confirmed low and confirmed high. And pretty much the same on the other side, on the sell side, but of course, well, the other way around. So this is my confirmed high, this is my confirmed low, this is the retracement, right? At this point, of course, until we actually break this is not a confirmed low or confirmed high, right? But when we break that, then that's when we move our stop loss above this high, because if price actually goes above that high, it's more likely to basically just well, not continue with that trend, right? In this case, well, it actually didn't do that. It didn't respect that high, took the liquidity, and pretty much then did continue to go down, as you can see, but we'll get into that in a second. So the reason why I ended up with a 0.10% instead of a 1.25 in this one is because, well, I had bad psychology on the stop loss, as the trade was pretty much here. We have 4R, right? On this move that we have here, we have 4R. So at some point that trade was at 1% profit, and pretty much it came back all the way up to basically break even, right? So yeah, it was a little bit of a bad psychology. I did have a good psychology by keeping it open, even though we were having such strong pullback, right, on it. But it should have been a little bit more strong, a little bit stronger, sorry, and pretty much just hold to my strategy, which is pretty much just moving my stop loss above this high, right? That would have been the strategy, and in that case, we could have gotten a 1.25. What happens here, as an example, is that, well, we have price maybe mitigating this, right? Took liquidity here, and then we break, right? We break that. If we would have had somewhat of a reaction inside of this demand area, then I might would have gone for this, right? For this sell that we have here. But as we just broke pretty much substructure at this point, I wasn't really interested in taking a risk entry onto that one. And since I had already pretty much taken a break even from something that I was basically at a 1% profit, I decided not to trade that because, well, I was not quite feeling as I was thinking as clear as I could, right? So at this point, I decided to skip onto this one, and as you can see, it worked out amazingly. Could have gotten on the 25, stop loss above, and, well, price would have gotten to more than, well, the 5R. So missed out opportunity, a little bit risky. We could say that it mitigates something, right? We could say, as I said pretty much early, that it basically mitigated the 50% of the whole thing, right? Which is pretty much here, but this already did it. So I can't really say for sure if there is a way for me to actually trade that, but I think we would have been able to. When I saw this first candle, I thought, well, that is a good area to try and sell, but it was a little bit too late, and at the same time, was not quite didn't have quite the courage to actually take that. I like this area, right? It's just a pause in the middle of nowhere, not gonna lie. It happened right after we basically broke this. price does come back, mitigates that, and does fall down again. This is not a trade for me. It's a little bit risky. Could have been a trade, right? But it wasn't for me. Price broke higher. This is a good entry already. At that point, that's a good entry, but I decided not to take it as I didn't like just that such a simple type of move, right? So I decided to wait for something else. Could have gone for this one, which would have ended up in a loss. Same with this one. I could have gone for that as we have a demand to supply flip after we break this low. So this could have been another sell that basically I had the confluences to take, but I didn't. And pretty much when we have this break here, I was kind of expecting sells, buys at this point. Plus we had also taken this low and we had taken somewhat of equal lows right there. So those are extra confluences that I've seen this type of structure working out lately. Where let's say you have something like this, right? And you have this, and basically then price continues to go higher. And when price goes down, maybe you would expect price to react to this, or maybe even the extreme, depending on the confluences that we have in each area. But what can easily happen, and I've seen happen a lot, is price takes the liquidity below this low. Basically took every single low that we had in the way up, that we created in the way up, and then price basically just continues to go higher after taking that low. So when I saw that we had taken these lows, and at the same time we had created liquidity along with those lows, and price took them before going higher, I don't know, that was just a pretty good confluence in my opinion, and I pretty much decided to go for it. And as you can see, it doesn't actually reach target. Target was 5R as usual. Could have aimed at this area, which is a pretty important area in my opinion. I didn't take a sell here, did I? No. I was about to, because I did place the entry and everything. And I took a loss here. I forgot to talk about it. So we basically had mitigated this, right? We broke down. We were reacting to this. I was expecting price to basically break this low. I was not expecting it to hold. So you can see it did continue to go lower, which is the reason why I decided to go for it. We did begin well, but basically it didn't last too long and pretty much ended. I think it was actually a very minor loss because I moved my stop loss about that high, or half the stop loss. I can't really say for sure. I did talk about it on Telegram as it was basically happening. Yeah, I can't really remember for sure. And at the same time, I was a little bit aggressive with my stop loss because I was expecting the price could easily come back up, take the liquidity, and then maybe go lower, or well we could see what happens after that. So where was I? Okay, here. So pretty much took this buy. I closed it here, where you have this thing. I think, at least. Oh, I don't have my MetaTrader open. But basically, when I saw the strong moves against this trade, pretty much, I realized that we had taken that liquidity. So I thought, well, price now took the liquidity, mitigated the 50%, yes, mitigated 50% of this over the block, right? So it was all kind of making sense at that point. So that point I wanted to be out of the trade, and that's when I pretty much, even though we had only a trend change right here, change of trend, I basically decided to go for this, right? I did mention that we had the pause too. If I would have gone for the pause, I think that there was a pretty good probability that it would have not been triggered out. So I would have gone maybe for the 25 or even the open. Stop loss would have went to this high plus pretty much 5 ticks of spread, right? So in this case, I don't really think I would have been triggered out, so that would have worked out great, and we could have even aimed to this, right? And that would have been a 127. So pretty good trade that happened there, but I was more convinced on the extreme area, and then even counted that as liquidity because of the fact that, well, that area had taken pretty much liquidity, and well, everything that was below it, right? So I was kind of more inclined to take that extreme than to take the pause. But in this case, the pause ended up working out, which is what I see the most on GU. The pause, sorry, not the pause, but the cause to the break. And yeah, pretty much it. So wanted to take a risk entry in this extreme. I ended up going for the 25. Well, not the 25 exactly, but somewhere around here. I wasn't triggered in. The price did tap this area, but due to this price I was not triggered. Price started to go higher, and pretty much on this candle, when we were going higher, I delayed the order, and pretty much price came back down, then went back up. I did a lot of things, right? But yeah, pretty much I missed out on a loss right there, and in my opinion, it was a good miss. Not gonna lie. So what we get onto later is that, well, we took liquidity down, we took liquidity up, price fell down, came back up, took liquidity up, and then continued to fall down. Right, that's pretty much what happened. At the moment, I realized that we had broken strongly this. We kind of came from mitigating this whole structure and basically took this liquidity. So I kind of wanted to go for this area, right? And pretty much I went for it and didn't work out at all, right? Took a loss there. A little bit of a weird price action, not weird, but basically not really good looking. Nothing really clear happening inside of this price action. Tried to get into something a little bit impossible, but well, I think that there were some really good confluences that, well, in this case, didn't quite work out my way. But I don't really regret that trade, to be honest. Forgot to say, I think I got 2R on this one, so 0.50, 0.60, something like that. Plus the 0.10 at this point. After these two trades, I was at a 1% profit. Sorry, not a 1%, 0.80, so $200, 200 and something dollars, which is pretty much 0.80, 0.75% of my account. So yeah, then we continue to go lower. So at this point, I actually had an entry here on the 25, if I remember correctly, of this. No, sorry, the 50% of this 5-minute order block that we have here. Right, where did we mitigate? Did we mitigate something? We mitigated the range, but we didn't actually mitigate what I would have expected price to. Okay, so pretty much I drew this 5-minute order block. I'm not quite sure what it was so high, but basically that's what I wrote. And as you can see, I didn't actually consider the wick, right? And also, if we do further analysis, we have some what if equal lows here that price takes with that wick, and then, well, you have such a strong move, right? So that's actually a sponsor candle. So what I did was, well, I had an entry to the 50%, took a loss, and then I realized that we had this boss that had taken liquidity, right? We have all of those equal lows together that basically price came back down and took. And at the same time, well, this is probably the low that we had on the 5-minute that basically complements the rest of them. And pretty much took a market execution on this one, right? When price cost created this pause, I decided to move my stop loss to below this area, right? And then price pretty much broke it. So this was, at that point, this was my favorite area, right? I had an entry at the beginning, and as you can see, price didn't actually come back until pretty much this. We created some really clean equal highs later, right? I took this buy. This buy ended up taking me on break even. I took it on the entry, if I remember correctly. It was actually a market execution, and it was somewhere around there. I can't really say for sure, so I don't quite remember. At this point, as you can see, 12.20. I had to leave 12.25, 12.30, something like that. And as you can see, the buy worked out for a bit. My target, well, was the 5R. I did think about placing it here, and pretty much as I was pretty much getting triggered on the sell, right? But I wanted to go full target on the buy as I wanted to go full target on the sell. So yeah, the buy worked out pretty great at the beginning. We did create equal highs, so it's a really good confluence towards the sell. And yeah, at some point it got triggered on sell, started pretty well. And if I remember correctly, when price took this low, that's when I moved my stop loss to break even, fully break even. I think it was 599. Yes, 599. So pretty much price came back up, took the liquidity on these highs, and then continued to fall, as you can see. So if I would have followed something that I haven't been following that much, because to be honest, I think it's a little bit it's not as beneficial as I might thought it was, right? It's the fact that, well, not before, but in the past, I would actually just move my stop loss to break even when price was somewhere like 4R or something like that, right? So pretty much pretty late, or after we had a DZE, right? So let's say this kind of worked out, then at that point, sure, my stop loss is there, or at break even, right? So basically what I'm trying to say, if I would have not placed my stop loss to break even, which is what I did here, I would have been tagged out in take profit at some point. But at the same time, we do break demand that we had down there, right? When we break this demand, that's when I say, okay, so I don't really want price going above this high, because if it does go above that high, then that means that we are basically breaking supply. It's a supply area that hasn't caused a reaction just yet, but for me, that's a supply area that if it is broken, then it's not worth for me anymore, right? So price pretty much came back up, took the liquidity, and fell, right? I was trying to find an excuse later when I basically came back home to say, okay, yeah, I think I should have not moved my stop loss to break even at this point, or to basically above this high, but I just can't find any, to be honest. I think that the decision to move my stop loss to break even at this point was okay, was actually a good decision. We had broken a major area, and I didn't think, and I still don't think that price should have gone above that high. Took the liquidity and they continue to fall, so that's okay. It's not much else that I can really do, to be honest. We did create equal highs with the low here, right? But if I had the same scenario in the future, I would for sure do the same thing, because when we are pretty much, we're already on the 50% of the trade, aren't we? 2.5 will be the 50, well, a little bit close to it right here. I don't really want to take a loss. Don't really want to take a loss at that point. At the very least, I want to get out with a break even, right? And that's pretty much what I did. Ended up with a break even. I would have wished, I hope, price would have not come back all the way up to the break even, or at least would have respected the high. If it would have respected the high, then well, I did have pretty much the excuse that I should have moved my stop loss here and not to break even, as my trading plan says. Yeah, still, as you can see, came back up, took the highs. I didn't realize that we had liquidity until just now, but yeah, not quite. Doesn't quite make much of a difference. Of course, that's critical highs, so maybe you could have thought of him, but yeah, after the break of this area, pretty much I would have not been expecting anything. So that's pretty much it. That's pretty much all the trades that I took. Sadly, ended up in a break even, so not much else to do for me. I've had a lot of fear of missing out today, which is not good, of course, that's not good. But yeah, I mean, I could have done way better. There are trades such as this one that we have here. That is a trade that I don't beat myself up for not taking it, as it is a pretty hard to find but really clean trade at the same time, as it basically leaves the 50% basically unmitigated and also has liquidity within it, right? So it's pretty, it wouldn't be weird nor strange for price to basically come back up, take the liquidity, and then fall, right? But it's something that, well, it's just, it gets lost in the middle, but it's something that could have been spottable. As an example, what I should have done here, the way that we could have actually pretty much identified this trade, is by having the area drawn, right? And when price is pretty much approaching it, then we say, okay, so we have this area, right? It has liquidity. The 50% is unmitigated. We even had another high right here that could act as liquidity. So price could pretty much come back up to that, take the liquidity, mitigate the 50, and from there basically continue to push lower. So basing ourselves on that, we might would have been able to at least identify it, right, and use it as a target, right? So gets away with a 3.49R instead of 2.74, right? And well, that would have been a much better way to basically deal with this situation. I'm not saying that you trade it right there. Maybe you do. Maybe you decide to take the risk for it, right? As I took the risk for this extreme area, that in my opinion was cool. Not cool. I mean, it was had good confluences to go for it, and same with this one. Because well, what I was expecting here is, as I said early in the morning, is well, we have a push up. We're coming back down very correctively, pretty much, and I expect price to basically react to the extreme and then continue on a long-term basis to the upside, right? But that's not quite what worked out. And yeah, I think that's it, isn't it? That's it, isn't it? But yeah, missed out on that beautiful trade. That beautiful trade, if we would have caught that one, or as an example, this extreme, even this extreme trade, catching a trade that is so high above, right? Catching a trade between pretty much this whole thing that we have on the top, could have been aimed to this area, right? Because when we are kind of reversing, right? When we start reversing and you start seeing trades like this one and this one, you can easily think that we're going to go to extreme areas or maybe take out the low, right? So taking a trade right there could have meant somewhat of a larger target. But as an example, this one having such a large stop loss, going for 8R. So look at how much it took for 8R, right? It's not quite profitable, right? Because let's say you had a 25 target, right? And you wanted to aim it here. Now you have an 11.5R, right? That's a little bit different. So of course we never know if it'll just drop like this or if it'll take what it took in this case, right? But when you have something like this, let's say you have such a large stop loss, of course I wouldn't use something like that. But if you have 4.5 pip stop loss, the 5R is already huge, right? And extending it just to get to that area for 1.42R, having the possibility that price might not get there, basically start retracing earlier, pretty much is not worth in my opinion. So if I have, as an example in this case, we had, let's put it back, we had 8.2R to go for. I don't really think I would have aimed to that, to be honest. This is a very large target, right? For a not much of a reward. Of course, 8R is pretty good, right? But I think you get what I'm saying. I hope. So yeah, pretty much I took. So what I took, I think it was 0.60 or something like that. 0.10 on this one. Took a full loss here. Took a really small loss on this one, if I remember correctly. Took a full loss on this one, break even on that one, and I think that's pretty much it. I don't remember taking any other losses today. So, not gonna lie, there was a trade. That was a trade that I was really scared of. This one, which is why I deleted it at the beginning. But I ended up realizing that we had a lot of confluences towards it, so I decided to go for it, and it ended up working out, right? And that basically at the beginning of the day made me realize that I have I have all the knowledge, not all the knowledge, but I have a really good base of knowledge that basically allows me to identify some of these opportunities. This is a really good trade, right? The only thing that we needed a pretty high stop loss, which ended up causing a large target, right? And there was a minor misanalysis, which this one could have caused me to, at the very least, realize that we had an area here and either close it when we start seeing the first signs of reaction, maybe around here, or either just aim at this area as a target, right? Or pretty much also at the same time, basically, the potentiality of taking a risk entry on of that area, right? Which is a pretty cool area. I think I could have gone for something like that. And also what I see is this strong move down, corrective move up, strong move down, right? That's quite what I would have been expecting at that point, and I think I was expecting that. Yeah, and we've been, as you can see, got another kind of an area here. This area here, right? As you can see, we have supply, causes a reaction, fails to hold. So this is now a failed reaction, not the best drawing. So the cost of that will either use that one or the extreme. In this case, well, of course, as I was already inside of this trade, I wasn't really looking to trade anything else, right? But I think I identified it when we had this first reaction, this area that we have here. Kind of took liquidity, had liquidity in the middle, but then even created more liquidity, price came back down and took, and will continue to go higher, right? So that could have been even a better trade, probably, than the extreme. But yeah, yeah. Also, something that I kind of wanted to talk about, but I think let's just do it here. Last Monday, let's actually pull all of this together. Last Monday, if I remember correctly, we had an amazing price action. What's today? 9/8, right? Yep, PA 9/8. I don't have the price action sadly, so I'm not quite going to be able to use that one, but I will be able to use this one that we have here. Let me get down here like that. I want to show something here. I want to show how price action can basically. What day was this? July 26th. Let's see, what was that? July 26th was a Monday. It's a Monday. Beautiful example. Okay. So first structure that we get up to a range. We have a demand area that causes a reaction and causes even another reaction here. We flip from demand to supply. The cost to that is an entry, and that entry works out. Could have been even into the 5R or could have been even into this other area of demand, right? Either way, 7R or 5R, right? What happens later? We have an area of supply that causes a reaction. In price, actually we have a lower one. So here we have an area of supply, causes a reaction, price comes back up, flips from supply to demand. The cost to that is an entry. We could have aimed for this area that we have here, which is a pretty strong supply area. Could have gone for this one, could have gone for even higher targets, which in this case would have ended up in a break even. So could have aimed for the highs, which in this case would have been 9R, but that target is the safest. What happens later? We have a supply area, causes a reaction. Price pretty much ranges for a little. The last candle before the up move is pretty much the entry, right? Pretty much the cost to that is a pretty good entry. So we target the equal highs. The entry, as I say here, is lower to pretty much get the 5R target, which is a minimum target. I kind of said that there, which is kind of what I should do. 5R should be a minimum target that we could go for to basically say that it's actually worth the risk. But I don't want to get into that. So we have demand here. We even have demand here, but pretty much breaks both areas. Price breaks that demand. So flips that demand, sorry. The cost to that is this pulse that we have here. Price comes back up, even created liquidity before it, and reacted well, right? Could have aimed even lower, just 5R gets to the target, okay? What happens later? We have a supply area, causes a reaction right here. Then we have a failed reaction, so a supply to demand flip. The cost to that is this pause, and price comes back, mitigates that, and goes higher. So what I'm trying to show here, even in this case, is that we're pushing lower. We have a demand area somewhere in the middle of this. Price comes back up, mitigates it, causes another break of structure. Price comes back up, mitigates, basically breaks that supply area that we had. So that's pretty much a demand to supply flip, supply to demand flip, sorry. The causes the extreme, comes back up, mitigates that, and goes up, right? So what I'm trying to show here is that some days you'll have such clean price action that you'll see stuff like this everywhere, right? You have a flip, you have an actual flip, not the previous type of concept that I used of flips, but an actual flip. Price comes back down or up, mitigates the cost of that flip, and pretty much works out, right? So this day, I remember backtesting this because I had to resume the week, and I think I caught 3 of all this, which was this one, which because it's just pretty clean. This one, and I think it was this one. I think there are the cleanest ones because this one, I don't remember to be honest, but I do remember taking at least 3, and I think that those were the 3. And in this Monday, we took 1, 2, 3, 4, 5, 6. Is that it? Did I count all of them? 6 trades, 6 take profits, just basing ourselves on flips of supply and demand, right? A Monday, right? And if we now go to our Monday, well, not our Monday, but the Monday that we just had, let's see what happened. We have a demand to supply flip here. The cost is this. Price comes back, mitigates the cost. goes down, most likely hits the target, right? What happens next? We have an area of, well, this is not quite a trade. This was a little bit of fear of missing out, as we didn't actually break the low of this. We did break the reaction, so this is a fail reaction at that point, but we didn't break the demand, so a dumb trade on that one. Okay, so this is the extreme area. Takes liquidity, caused the demand break. We could even say that it causes the flip, but as it is the demand area, we have areas in the middle that could count as the cause, right? But pretty much demand to supply flip, takes its time, comes back, mitigates, and falls, right? Here we have a supply to demand flip right here. The cause could have been either this, or whatever. At the same time, when I was actually watching this price action, I realized of this. We had a supply area here, causes a reaction, but then price breaks it and comes back to mitigate pretty much this whole range that we have here, right? Mitigate and roll the high of this candle and then continues to go higher. So that could have been a buy that we could have taken, but to be honest, I didn't even realize about it in the moment. But pretty much what I'm trying to show here is, let's actually continue. We had a flip here. Did the cause react? Did the cause actually give out a reaction in this case? No, it did not. Okay, let's continue to see. We have a demand area. We break that. This is the cause. Did it cause a reaction? No, we had an extreme area, took the liquidity, and basically then continue to go lower. Here we have a flip. Did the cause work? It did. Did the continuation work? It did for a little. Then we have another flip. Did this flip work? It did not. Did this one work? It did. Then we even have another supply area that causes a reaction, broken, comes back, mitigates the cause, continues to go higher. We have a trend change here, as we didn't actually break the low on this move. Price comes back to the cause of that and then continues to go lower. So what I was actually trying to say here is that the concept is there. The concept is applicable to any market. Well, not any market. I don't know. I just use NGU, so I have no idea if it works on other areas or not. On other markets, such as, I don't know, the stock market or something like that. Don't trade that, so can't really say for sure. But what I was trying to say is that there will be days, such as the Monday that I showed first, where you'll have such clean price action, and you'll see that maybe you, by catching every single supply to demand flip on the cause or the extreme, whatever you're gonna want to go for, you might end up with 6-day profits in a day, as you might end up with what do we get here? Let's say we got a stop loss here, or maybe on the extreme. Let's count the stop losses first. So stop loss here. This would have been a take profit. Okay, so let's mark it like that. Where else do we get a stop loss? Here we have a flip, so this would have been a stop loss on the cost of that flip. Well, demand break, not flip as we had flipped before. So we're talking 2 losses, 1 win so far. You have a flip here, you go for this one, let's call it a break even. This one is a stop loss. Stop loss, take profit. Well, not take profit, but if you aim for this, then yes, it's take profit, or maybe even this area, right? You close this buy here and take the sell, so you take a stop loss there, and so what if a profit there? We have a change in supply here, doesn't get mitigated the cost to that. I'm gonna get tired of this. I don't really remember what I marked. So basically, we got 1 full take profit. We have 1, 2, 3, 4 losses. Let me actually write this somehow because it won't make sense otherwise. So let's say we had 5R plus 3R minus 1R minus 1 minus 1. So we had this loss, this one, and this one, and this one. So 4R lost so far, right? We have a demand break, supply break here, right? On this move right here, right? So that could have been another trade, but we're not going to count that one. Here we have a supply to a demand to supply, demand to supply flip, right? So that's another loss, minus 1. And have a demand break, misses it, demand break, comes back and mitigates that. So that could have been a target trade that I considered, but I'm not gonna lie, I was not quite sure of it. We have a flip here, that's a target, 5R. We got another flip there, so that's a break even, let's call it. But pretty much this is what we would have gotten in a day like this, like today, right? So you have 5 plus 3, you got 8, plus minus 1, minus 1, minus 1, minus 1, minus 1, and plus 5. That's pretty much 8R, right? 8R. That multiplied that by 0.25%. Yes, right, 0.25. That would have ended up in a 2% profit, right? 2% profit that basically would have been in a day that this way of trading a little bit aggressive, as you shouldn't really take every supply and demand flip. In a day that it didn't work out as great as other cases, it still gave you a 2% profit, right? So this Monday wasn't as good as this past Monday and as this other Monday, right? Because the last Monday, I remember that it was crazy. What Monday was it? August 2nd. I think you can go and see the video of it because it was just nuts. You have trade after trade after trade after trade. And it worked out amazingly. And there will be days where this type of strategy or this type of trading will work out great. And there are days where it just won't. It's just as simple as that. And today, wasn't the greatest day, but at the same time, you kind of could have ended up with somewhat of a profit, right? So just things to consider. I wanted to show that because I even myself thought, oh well, actually, if you remember correctly, we had these past 2 Mondays where price action actually was great on Monday, and then you got today, price action didn't work out as well, right? I just wanted to add that on the video, and that's pretty much it. I'd say we're looking at somewhat of a, in my opinion, correction to maybe the daily order block, as I said. The how do I say this? On the I don't know, the top-down analysis video. Yes, that's pretty much it. That's all for today. I'll come back tomorrow with way better results, and I'll be seeing you soon, guys.